All right, let's dive in. Today, we're looking at a gold mining company that might just be flying under the radar for a lot of people, Alamos Gold. The source material we're digging into today paints a really interesting picture, calling it a seriously overlooked opportunity. So let's find out why.
And this quote really sets the tone for our whole discussion. The golden compounder nobody is watching. That's a bold claim, right? It frames Alamos Gold as something different, not just another name in the sector, but a unique play that maybe, just maybe, the market is sleeping on. It suggests they're quietly putting something pretty special together.
So, that leads us to the big question, doesn't it? What makes this gold stock so different? You know, in a world where everyone's either looking at the giant, well-known producers or taking a gamble on tiny, high-risk explorers, this analysis says Alamos has found its own lane. Let's get into exactly what that means.
Okay, section 1, the big picture. The source material uses this great phrase. It calls Alamos Gold, that's ticker AGI, a quiet monster that's landed right in an investment sweet spot. And we're not talking about some wild speculative bet here. This is about a company that seems to be sitting at this perfect crossroads of stability and some serious explosive growth potential. So what is this sweet spot? Well, it really boils down to three main things. First, you've got jurisdiction. Alamos operates mostly in Canada, which is about as safe and stable as it gets in the mining world. That's huge. Second, cash flow. We're going to see that it's about to hit a massive turning point. And third, production, which the source says is about to go vertical. You put those three things together, and suddenly you have this really interesting alternative to either the boring old giants or the super risky little guys.
All right, now this is the real heart of the story. The one thing you absolutely have to understand. It's this massive catalyst called the Island Gold Phase 3+ expansion. Look, for the past couple of years, the market has just seen Alamos spending a ton of money on this thing. But now, we're right at the finish line. We're in the execution phase, where all that spending is about to start paying off big time.
And this slide shows you exactly how it's a game changer. It's all about going from truck to skip. Think about it. Before, they had to haul all this rock out of the mine with trucks. It's slow, it's expensive, it's inefficient. But this new expansion, it's all built around a giant shaft, which basically acts like a high-speed elevator for the ore. They can just skip it to the surface. It's way cheaper, way faster. Honestly, it completely changes the economics of the entire mine.
And check out this timeline. We're getting really close. The source says the hardest part, actually digging the shaft, was pretty much done by late 2025. Now, the new shaft is set to fire up in the second half of 2026. What does that mean? It means the market is about to start looking ahead to 2027 and pricing in these much bigger production numbers. This isn't some far-off maybe anymore. It's happening, and it's happening soon.
But wait, there's more. The Island Gold expansion is the star of the show, for sure. But there's another really important piece to this puzzle. It's like a hidden power-up. The source calls it a synergy masterclass, and it all revolves around their acquisition of the Magino mine. See, this wasn't just a simple purchase to get bigger. It was a really clever strategic play. In mid-2024, they scooped up the Magino mine, which is right next door to Island Gold. Now they're basically combining them into one giant complex. And here's the kicker. They're going to use Magino's huge processing mill to chew through all that high-grade ore from Island Gold. It's brilliant. It lets them achieve a scale that neither mine could have even dreamed of by itself. And what's the result of all that synergy? Just look at that number. By late 2026, they're expecting to be processing around 12,400 tons per day. That is a massive jump in capacity. It just goes to show you the new scale we're talking about for their main Canadian operation.
Okay, so we've got bigger operations, more production. That's all great, but what does it mean for the money? How does this actually hit the bottom line? Well, that brings us to the financial side of things, and this is where Alamos could become what the source calls a cash flow king.
And to get a sense of just how strong their finances are, get this. In just the third quarter of 2025, they generated a record $130 million in free cash flow. Now, what's so amazing about that is they did it while they were in the middle of their biggest spending phase. That just screams that the core business is incredibly healthy.
And hey, just a quick refresher for anyone who's not a finance nerd. Free cash flow, or FCF, is basically the cash a company has left over after it's paid for everything it needs to run and grow the business. It's the good stuff. The money they can use to pay dividends, buy back their own stock, or just pile up in the bank. It's a super important sign of a healthy company.
Right, so this is the inflection point we've been talking about, and this simple chart shows it all. Look at 2025. Free cash flow is already strong, even with all that heavy spending on new projects. But now,
just imagine 2027. That big spending, the capex, drops way down, and at the exact same time, all that new production comes online. You see what's happening? That's when the free cash flow is set to just explode. This is the whole financial thesis in one picture.
So the fundamentals of the company look pretty solid, right? But what's the stock chart saying? The analysis we're looking at also dives into the technicals, and it suggests that from a timing perspective, we could be getting very close to a major move.
And the key pattern they're pointing to is something called a cup and handle. Now, if you're not a chart guru, don't worry. It's pretty much what it sounds like. It's a pattern that looks like a teacup. For traders, this is often a really bullish sign. It suggests that a stock has been building up energy and might be getting ready for a big breakout to the upside.
So let's break down the technical picture. The stock's been grinding higher, which is good. It's forming that classic cup and handle pattern right up against a key resistance level around $42. The volume shows that the big money, the institutions, they seem to be buying and holding. And other indicators, like the RSI, suggest the stock still has plenty of gas in the tank. You put all that together, and you have a pretty compelling technical case for a potential break.
Okay, so we've covered a lot of ground. We've looked at the operations, the financials, and the stock chart. Now let's tie it all together. What's the final verdict from this analysis? And just as important, what are the risks we need to be watching?
Here's a quick look at the key numbers. Yeah, the PE ratio looks a little high, but the argument is that the growth potential justifies that premium. Production is set to really ramp up in 2026. The jurisdictions are safe, and this one is huge. The balance sheet is rock solid. We're talking over $600 million in cash. That means they have all the money they need to get these projects done without asking investors for more. So when you add it all up, the conclusion from the source is pretty straightforward. They rate Alamos Gold as a buy/accumulate. The idea here is that this could be a sleep well at night kind of growth stock, which is pretty rare to find in the gold mining space, a sector that can be, incredibly volatile. And they're not just being vague about it. They've put a number on the table. The price target suggested in this analysis is $52 by the end of 2026. And the logic makes sense. As that massive Island Gold expansion finally starts producing, the market is going to have to look at this company in a whole new light based on its new, much bigger production and cash flow numbers.
Now, of course, there's always a risk, right? And this analysis is very clear about the main one you need to watch. It's all about execution. If for some reason there's a big delay in getting that shaft finished, say it gets pushed past the second half of 2026, well, that would delay the whole story and would almost certainly hurt the stock. That's the one thing everyone is going to be watching.
And so that brings us to the final lingering question. We've got this massive catalyst literally just around the corner. The whole thesis really boils down to this one thing. Is the market finally about to wake up and see this quiet monster for what it is? That's the big question as this story plays out. Thanks for joining me for this breakdown.